and just really quickly point out that someone removed one of the plugs from the cameras and it's not in the room. So we're just like Phil's camera died, but they're all plugged in. I'm like, wait, what? And then we looked and it's just gone. The plug was just stolen by somebody.
Cable's gone.
Is
But
it a
should be okay
HDMI? Oh, it's back.
No, the power cable.
Yeah.
Like the plug for the camera is just gone.
Yeah, it's a little Hammerhead 8, but it's okay.
We figured it out because we got mad skills. But anyway, let's talk about the story here. We got this from the Kobasi letter. The 2-year Treasury yield is now on track for one of its biggest 2-day drops in history. The yield is down over 100 basis points from its high last week. Bond markets are moving quicker than what we saw in 2008. Bonds think the system just collapsed. I certainly hope not, but in the event that they do, I suppose the question is, what happens if the market actually does collapse and this assessment is correct? If all of a sudden you wake up in the morning, your bank is telling you, hey, you can't take money out just yet. Hey, we're not so sure what's going to happen. Or outright, this ripples through all these other banks. I got to tell you, I looked at a bunch of bank stocks. I looked at the stocks for some of the banks that we use, and they're all very, very, very down. And that's kind of worrying. So, Drew,
Well,
what happens?
The investors in bank stocks need to be worried, which is largely wealthy people, big funds.
Well,
Average citizens aren't going to lose from this, and again, your deposits are insured.
Well, no.
Your bigger worry is these bailouts.
No,
the federal money going into that.
I
That's
get that.
gonna cost you.
But I mean, if the big companies go under and we do see a great recession-like event, or this is worse than 2008, then what does that mean for the average person in terms of their ability to get a job, their ability to find food, or what?
Well, I think the 2008 threat and this threat to the average citizens and average banks are grossly exaggerated. I mean, if you're a small bank, a normal bank, you're not affected by things going on in Wall Street. You're not investing in derivatives or high-tech companies. Your banks aren't going to fail because you don't have investments in that. Your investments are in mortgages, traditional stuff.
Signature Bank was real estate.
Will not fail. Yeah, but what kind of real estate? Commercial real estate, big, bold investments and bad bets? So the investors in that bank, they should lose their money, the bank should fail, and citizens shouldn't bail it out. Because when they bail it out, now I'm being punished. Everyone across the U.S. gets punished when the U.S. government steps in and bails someone out.
So
we will pay for that.
You think the real risk to the Americans is if they do the bailouts, not if they ignore it?
Correct.
So wait, if they do the bailouts, then people are going to lose money and...
Yeah, because our debt keeps going up, inflation keeps going up, and sooner or later you got to pay for that. And it's going to hurt the economy. It's been hurting us, already. We're likely to have a recession. We've been in recession threat mode for a long time. Why? Because the federal government gave away trillions of dollars unnecessarily during COVID. You cannot give money away. Sooner or later, you got to pay the price. The price is we're going to go into a recession, and we're going to have horrible inflation. We're paying the price. So every time you bail out a big Silicon Valley bank or a Wall Street big firm, which you wouldn't do for a mid-size or small company or bank, whenever you bail them out, citizens everywhere else, not just in the U.S., but around the world, since we've got the dollar, they pay for that, and it shouldn't happen.
So then it sounds like, let's just let them fall.
They should
fail. Bannon was saying that on Friday. He was telling Matt Gaetz and Dan Bishop on this show, resist, do not let them convince you to bail these people out, But I wonder, if in 2008 they didn't bail out any banks, what do you think would have happened?
Well, no one really knows, but I don't think it would have been a disaster. It would have been a disaster for the Wall Street firms, but who cares? I mean, if Goldman Sachs and Merrill Lynch, you name all those firms, if they went under, who did they lend to? Huge Fortune 500 companies who pay outlandish fees, and they're not the only ones who can do investment banking. There are investment banking firms, small ones, all over the U.S. who can step in and take their place. They should have had trillions of dollars of losses in derivatives. Let them take their losses. 98% of Americans don't invest in derivatives. They don't invest in these high-tech companies, so we won't suffer.
We have some comments here. People are saying you're wrong. There's a video of the FDIC saying they only have funds to cover around 4% of the losses and the risk is real. Someone else said that the FDIC has only enough to insure about 1% of the deposits. And this will be a push to get us into CBDC. I don't know what that is. This is
Central Bank Digital Currency.
Oh, yeah. Okay.
Okay, well,
Which
who's
is the
going to bail out
worst.
FDIC? That is something the government's there to bail them out. So if we want to bail out the FDIC for the $250,000 deposits, that's okay. I don't want to bail out for the investment beyond the $250,000. That's the bigger bill we can't afford.
You know, one issue is bank consolidation. In 2008, 465 banks failed. A bunch of them were, maybe all of them, were bought up. It was like Wells Fargo. We came out of that with like 4 big banks. I could see another, same with the Great Depression. That was a big wealth consolidation. You know, they bankrupt everyone, they buy up the assets.
It's always, well, I mean, and I just want to push back a little bit on the idea that they bankrupt. Like, it's not intentional. Like, it's not like there are people pulling the strings that are trying to bankrupt other people so they can buy up the assets, or at least not all the time. I know that has happened in history, but still, the point being, like, that the consolidation happens because if you have a lot of money and and everybody loses money, you still have a lot of money, so there's a bunch of opportunities to buy stuff up. That's what happens anytime there's any kind of financial crisis or whatever. Rich people get richer because they have funds to capitalize on the marginal businesses going under.
Well, let me ask you guys a question though. So Timcast Corporation has more than $250,000, and that's the only amount that's insured. What if our bank went under? Everybody here would be out of a job. How would people here feel about that?
You got to be able to make money. If we're not making money, we deserve to fail. If we're not in
That's
the black,
not what
then
I'm
we deserve
saying.
to fail. Because if our banks go to zero,
Stop. If the bank froze our money right now, there would be no paychecks for any one of the employees. The company, of course, makes money, but the money in the bank that we need to pay the employees until revenue comes in, because it comes in, it doesn't come in. We don't just have money. Our customers, our members, they will, pay $10. Advertisers will pay a monthly thing or once a month. For those 3 to 4 weeks, if we have no money, what happens? We just tell all of our employees, don't worry about it. We tell our utilities. So this is the question. When I'm looking at these tweets about people lining up outside of Silicon Valley Bank, and you show up one day, I want people to think about this. You show up to your bank because you're a regular working class person, and they're like, you have no money. You say, how do I pay my rent? You're a small business who maybe isn't even one of these big woke tech companies or whatever, and you've got $1 million and you need, and you're a business that, you got a decent profit margin. Let's say you're doing 10%, 20% per month. You spend $500,000, you make, say, $600,000. That money goes into emergency rainy day funds, potential investments. Then you have your employees that are the bulk of those costs. And then one day your paychecks bounce. The bank says there's no funds. What do?
You should have 5 bank accounts first, so you have 1.25 million insured by FDIC.
Per the size of your bank, you should probably have a ton.
5.
Of bank.
The 5 number is great.
No, 5's not good enough if you're Facebook. You know what I mean?
5's not good enough if you're
Right.
Facebook. But for small businesses, you should have multiple bank accounts. A lot of people having issues couldn't get their money out because they didn't have anywhere else to put it. So they're like mad dash to open a second bank account, like have multiple business accounts. Secondly, I think, if your company can't pay the people aren't going to get paid. That's the deal.
You know what I was
like,
thinking?
get ready to live without money for 4 months or 3 months or 2 weeks or whatever.
I want to say some words just before I make the statement. Max Kaiser and Stacy Herbert, because I was thinking today, we were talking, if we had a part of our balance sheet in Bitcoin went up. And Bitcoin has a different stability. And a lot of companies transferred some of their balance sheet into Bitcoin. And so if we were like, we use primarily USD for all our liquid transactions, but then we store some of the value in Bitcoin and actually pay some employees in Bitcoin. All those employees, that money they get in Bitcoin is worth substantially more right now than it would have been when they received it. So I'm thinking like, I don't know if the intention with all this collapse is to push us into like that person was saying, central bank digital currencies or something like that. But it certainly has me looking at my crypto being like, it's up.
It does have the intention of bank consolidation, centralization of currency, and then I think they're going to want to try and track it. So,
well, they're going to be any kind of, if you use a CBDC, they automatically can track it. Any kind of
Yep. Everything you do.
Any digital currency like that, it's automatically tracked. They can turn your money off. They can tell you what you are and are not allowed to buy. Your money is completely programmable.
But if that's the direction of the water flow, then maybe we should.
No.
Oh, crypto? I mean, don't
Not
ignore
crypto.
it.
No, crypto is one thing. Bitcoin is different, and a CBDC is a third.
Yeah, CBDC doesn't have to be on a blockchain.
I just want to point out the rumors going around, and I don't know if this is true, is that Harry and Meghan had their money in SVB.
I heard that.
And I don't know if that's true, but everyone's laughing, being like all their money's gone or whatever. Either way, it's probably a scary weekend because even with Joe Biden coming out being like, don't worry, we're going to pay everybody to get access to their deposits or whatever, how long do you have to wait and where is the money?
Again, the message should be you don't have to worry if you've got less than $250,000. There's no need to do a run on the bank. That should be the message.
No, for sure.
The
but
message shouldn't be no matter how much money you've invested or how badly the government will bail you out. That we cannot afford to do.
All that they do is tell these big banks, keep playing with the money like jerks because the
You're
taxpayer
too big
has your
to
back.
Fail.
They say it's not coming from the taxpayer, but here's what Joe Biden's not telling you. The money paid to the FDIC, the premiums paid for FDIC insurance is intended for you, the little guy, not for the millionaires and the billionaires. And now what they're saying is your rainy day fund is being given to the millionaires and the billionaires. Sound like Bernie Sanders over here. The millionaires and the billionaires are getting your FDIC money.
From 5-cent nickel, historically, the FDIC pays insured deposits within a few days after a bank closes, usually the next business day. And what they'll do is they'll open a new account at another insured bank and then send you the money that way. Someone mentioned that it might take a couple months earlier, but I think they move pretty quick, hopefully. If that's true, then yeah, I think the small guy doesn't have anything to worry about.
Thanks for watching this clip from the Timcast IRL podcast. Hang out with us live Monday through Friday at 8 p.m. and become a member over at timcast.com for uncensored, members-only shows exclusive. Thanks for hanging out, and we'll see you all next time.